this is my first post-market analysis. I had to sleep, and because I had to sleep, I woke up at 7 o'clock instead of 6:05. But my body was feeling very thankful for it, and my mind was feeling a bit more sharper today. Traded a little bit more than usual today, but I'm going to go over some of the trades and where the market was and my positions and why I took those trades and where I think the market might end up mañana. So here we go, everybody. Let me go to my account management, balances. Okay, so this was the daily. Alright, so as you can see, I had 7 trades for the day. 1, 2, 3, 4, 5, 6, 7, excuse me. 8 trades for the day. Very active. Totaling of $56. $56 in trades, but I ended the day positive, even though I started out kind of negative. Something that happens during trading, and you must work through it. Alright, so to begin, I woke up in the morning, 10:05 a.m. Eastern Standard Time. Excuse me. I'm a bit tired right now. 10, where is it? 10:05, where's the candlestick? 10:05. Alright, so I guess I should probably get to the 2-day just to show you why it is I traded the way I traded. Alright, so 10:05, this candlestick right here with a high of 2023.21 and a low of 2020.62. Closed at 2020.02 and opened at 2020.02 and closed at 2021.38. I will explain the reasoning of the trade to cover my my VXX shares, which technically gauge the market to go short or down. When the market opened, I was long and short 100. That's called in the box when I'm long and short, and there's no variance to my account balance. And then I was in the box 100 and short 100 UVXY as well. So at 10:05 a.m. Eastern Standard Time, I bought to cover 100 shares of VXX at a price of 33.38. So that's this candlestick. I'm gauging whether or not to show you here. I guess I'll go ahead and show you what the VXX was trading at that point in time. Let's do here, VXX 5-minute 1-day. All right. Okay, so back to today's executions. I ended up having, this is the 1-day, going back to 2 days. I ended up having a trade at 10:05 on the VXX vehicle. That's the iPath S&P short-term futures. It trades the VIX on the short-term VIX futures. So that's the VIX is composed of the S&P puts and calls. So at 10:05, I bought to cover 100 shares, effectively putting me short the market at 10:05. So that was right here. And as you can see, VXX went down from there, but then quickly recovered, and I ended up selling my VIX shares at 32.67 for a loss of $76 when I include the trading costs. And that trade was taken at 10:28 a.m. So yeah, that was pretty much at the bottom right here at these candlesticks. So yeah, I sold. Sorry. I lost money when I ended up shorting the market here on the VIX, expecting the price to go up, but covered a little bit too early right around here. Prices moved up considerably from that point. Oops, sorry. Going back to the VIX, or excuse me, UVXY. I ended up trading that as well, and sold a position in the box at 27.47. Let's go ahead and round it, and that was executed on 10:15 candle. These perforated lines are the days separated. So, as you can see, like 1.5, 1.6, 1.5, 1.6, right up here in this area. So yeah, so today at 10:15, I sold UVXY. This is the UVXY chart here, and then I bought it. I was short UVXY. It went down a little bit from this candle. Sold at 27.48. So yeah, right here ish, I sold. Went down all the way to 26.84. Started moving back up on that S&P breakdown, and I ended up buying more at 10:44 a.m. at 28.12, 150. Affected me, putting me short again for the SPX by 50 shares. Had a little bit of technical difficulty with the brokerage firm I traded with, and I couldn't buy more at that point. But yeah, I pretty much at 10:44, this candlestick, I went long UVXY and effectively solidified my loss of, I think it was like $85 on UVXY. So it was down like $124, I believe. So yeah, so then I went long UVXY, bought some more here. Um, VXY at 1113 at 2963. So the 1115 candlestick is right there, and 2963 was the lower end of this candlestick right here, this green one, right there. Just moving it away, and then I sold 150 3014 right here, just because it was trending on this upper Bollinger Band, and I didn't want to risk whether or not it would fall below prices. In retrospect, I should have waited to see if this candlestick I sold on dipped below the previous candlestick, and that low was 29.84, and this low was 29.95, and this opened at 29.97. Yeah, okay, so it went a little bit below the opening, the previous candlestick, but it closed above. Yeah, 30.17. And then it proceeded to go higher all the way up to 31.26. But I was out of the market at that point. When I sold this 150, I was 100 short, back in the box in UVXY. So yeah, I was out of VXX and UVXY, and that trade was about I think it was like $68, including trading costs. So I cut my losses a little bit during the day, and then I turned out to XIV. And XIV was, I guess, my save sake for the day. I ended up making a pretty good trade here. When I bought 100 at 28.06 at 11:45, so that was this candlestick right here, 11:45, and that was at 28.06. So again, that was at the lower section of the candlestick. Then prices rose from there and then dipped below. I was thinking about these prices touching the lower end of the Bollinger Band, but didn't end up selling. And then prices rose from there, touched the top, and the bottom, and then I was thinking, okay, so sideways moving from here. If this support level holds, and it held, prices rose, uh, formed a nice little cup and handle on this resistance area right here. A cup and handle is, this is the cup, this is the handle, and then prices rose. And cup and handle is just a trading pattern identification for this type of candlestick pattern in the charts. When resistance is at these levels right here. Sorry. Hold on. These levels right here, and they dip below, but don't go below the low right here. The previous low. They rise, touch the top of the Bollinger Band. Classic formation setup with a lower high, and rose from there to form the cup, and then at that resistance point, and then the handle, and then found support at that lower at that mid Bollinger Band, and then rose from there. And then I ended up selling, I believe, at this candlestick right here. See, XIV sold short 100 Yeah, so I sold short 100 at 29.30 at 2:53 p.m. Um, so 2:53, 14:55. Yeah, so this candlestick right here, I ended up selling short. Prices dipped down below, found support at that uh, 10-day simple moving average. Rose from there. Another 50 cents with XIV, and then closed below where I sold it. So I ended the day positive, approximately $85. Trading costs were $56. Um, Again, that number will be negated as far as trading costs once when I'm able to trade more frequently when I get above the 25K mark. Day trading is something that is uh, is definitely something that doesn't require any type of uh, degree or anything, but it does require a lot of virtues and a lot of research and a lot of discipline. So, yeah, like I said today, I was down and then I was up. Um on the daily for tomorrow, um, see, well, today prices found support a little bit below that lower Keltner range. This orange or purple band is the lower Keltner. This is the upper Keltner. It's inside the Bollinger still, and the Bollinger is above the last low. So I'm thinking prices tomorrow may, if they do try to move down, find support within this range here. Um, this is gonna move down tomorrow, so that would be like 1975 to where it closed today to the 2000 range. The low of yesterday or today was 1992.44. So that would be about 10 points, 10 points and some change from today's close. Uh, Support levels uh, from this Bollinger Band, and yesterday or today's close would be level 2 of 1973, 1975, or 1973-4. So yeah, so anything like 1975, anything like that, would be a definite buy for tomorrow if it does get to that level. I'm not expecting it to. I think it's going to keep more of the range here and do something arbitrary in the 80s, 1980 area. If it does move down, if it moves up tomorrow, looking at resistance in the area in the middle Bollinger Band range of 2048, and that's my take on tomorrow for the SPX. Resistance 1 is 2022. It's 20 points higher from today's close. Something happens where it goes up and engulfs, then so be it. But prices are are looking down for the last 1, 2, 3, 4, 5 trading days, going to a little bit larger time range on the daily, 11 months. You can see prices finding support on this Keltner range. And a move up from here would be in agreement to most recent price movements and volatility action. Um, as far as a megaphone pattern goes, a lot of people are doubting it, but I don't know if it could digress from here. As far as prices go in the SPX, this low, this would be a potential level of support, which is way down there, 1932. Um, it would validate this continuation pattern, but at the same time, uh, define this megaphone pattern even more. At that point, I mean, prices rising would be fairly awkward. I would look for another megaphone pattern developing with sideways action if prices were to fall to this 1928 level. Um, on the 5 minutes, going to 3 days here. See prices today found the upper range of that Bollinger Band and the lower range of the Keltners. It's not quite the low range of the Bollinger. But if prices do begin to fall tomorrow, I'd expect if futures hold steady for this range to hold. But if that doesn't happen, prices could very well just plummet below this support range of 1992 when it breaks the Bollingers, and see how far back it can go here. Yeah, again, that's the 1980 area. So yeah, this whole range in here could be it's playroom for support. Could be support. If it were to act as support, I would think that any type of move up from this range after this move down would be some type of relief devil's rally, as they call it. Devil's rally is a rally that takes place during the bear market. Devil's rally be pretty fierce. Today's Tuesday, so Wednesday, 3 more trading days. If this gets engulfed in 3 trading days, then I would expect another consolidation move like this after 3 days, like 1, 2, 3. If prices were to find support and make that type of bullish move up from this range. So it'd be like 1 close, 235, 3 second day, right around here, 260, and third day would be 10, 20, 10, and then consolidation candlesticks slowly moving up at that point. Give you a better idea about what I see. You know, something where prices would start trying to find range in these prices between 2020 and 2080 for a bullish formation. A bearish formation would have prices fall a lot lower than where they're at right now, and that's 1933 plus like 2 days, so that would probably be 1920. So yeah, it would definitely be testing this gap support right here when prices exceeded this range right here in these Bollingers and this SMA. When it broke through that resistance area. At this point, if prices move down to here, support, rally, I'd be looking for 2021 as major resistance to hold. Prices were to move up, but a rally into that range. Yeah, so that was my trading history for the day and hypothesis for tomorrow. VIX finally touched the upper section of that Bollinger Band when I thought it was going to happen on Friday, and that was Mondays, and then Tuesday. Today, tomorrow. Um, these mid Bollinger ranges look very sexy for some reason or another, but there's a lot of support in between there and that, where prices closed at in the VIX at 2112 and support at 1927. So I would expect maybe prices maybe dip below the top 1800s, 1890, and then rise back up, possibly develop a pattern that'd be similar to where was it? I saw it before. Here. Right here. 1, 2, 3. Prices broke above the Bollinger Band, but still closed below it. So I don't know. Tomorrow could be some type of follow through day and bottoming candlestick where prices rise above. Develop some type of double top pattern and then break down from that point, and then the next day try to do the same thing. But that's a lot of hearsay at this point. I'm just hypothesizing 1 or 2 days out. This is the SPX. I don't know why it's not showing up. It's right here. But on the 60-minute SPX, let me just double check to make sure this is current. You can see the Bollinger Band still falling below prices as it prices find support on the lower end and begin a rally, which looks like a slightly bearish signal. So if the VIX were to rise tomorrow, I'd expect prices to dip down below this upper 1988 area in the SPX, find support, form some type of reverse head and shoulders pattern down in here. Yeah, so this pattern right here could very well be this pattern right here. We touch the mid Bollinger. It's gonna go down. Wow, good 25 points. Yeah, so 25 points is a pretty big deal. So yeah, that would have support exactly at 1977 for tomorrow. Gauging these Bollinger Bands, how fast they retreat. At that point, I would expect another rally and then decrease until we go back up. The MACD, wow, what did it do? MACD is just coming up to the signal line. This is the 0 point. This would be a signal to buy or sell whether or not this MACD green line rises above or below the signal line. Right now it's below the signal line, which indicates the market is still a sell, but it's contrary to what prices have been doing as far as the 0 point goes. There's divergence, so in the MACD and prices, because this is a lower low. This is a higher low. Prices have been rising or falling. This has been rising, but yet the signal line has still remained bearish. So tomorrow I would look for some type of exhaustion bottoming candlestick in the SPX, and have prices move from there. Alright, thank you very much for watching. This video was kind of long. I appreciate your time. Have a great day tomorrow, and hopefully I'll get up early enough to resume my normally scheduled recording. Thank you again.